Hello, everyone. Welcome back to the Blockware podcast. We've got a huge episode today. I'm excited to welcome Rohan Hirani to the show. Rohan, welcome.
Thanks, Mitch. Happy to be here.
There's a lot I want to talk about, mostly around your website. So it's bitcoinquant.co. It's, as you self-described, the Bloomberg terminal of Bitcoin Treasuries. Super exciting, and we'll dive deep into it. But first, I want to start just learning more about you. So who are you, and what's your Bitcoin origin story?
Yeah, good question. So I'm honestly just a regular guy. I'm 24 years old. I first discovered Bitcoin in high school. A friend of mine had bought $5 of it. We were watching it during our learning seminar. It went up to $6. Oh my God, down to $4.50. Like, this thing is so crazy and so volatile. But I didn't know what it was. I didn't have any capital, so kind of just ignored it. 3 years later, it pops up again. It's the kind of thing that just keeps popping up if you keep ignoring it. And so in 2020, some friends of mine had been big in like the blockchain Web3 space. And so I helped them build Illini blockchain at our university to basically help people understand the world of like Web3. And so got all excited about that. Once the bear market hit, I was like, what is all this? You know, it's all so exciting, but I didn't actually understand what any of it meant. Like, I had read the white paper at first, but it was a bit too technical for me. I didn't really understand the use case of peer-to-peer payments. And so I sat down and I'm like, let me actually understand this. And what really made it all click in like late 2022, early 2023 is when I read the Bitcoin Standard and started to look at Bitcoin from the perspective of like, what is the history of money? How did we get to where we are today? And has the world always been like this, or is there something that I'm fundamentally missing? And then over time, I feel like Bitcoin has been the best education in general knowledge. You know, it's taught me more about economics, psychology, cryptography, math, game theory, politics, and I've started to understand the world from this more Austrian economics perspective, and it's just been a journey ever since.
Yeah, that's great. And it sounds like at some point it clicked that this is about money, right? It's not necessarily about streamlining databases and making, communications at the University of Illinois more efficient or anything, what the Web3 blockchain folks might say. It's like, this is about preserving your purchasing power, which money is the most important industry or resource in the world because every industry is connected to money. And so, yeah, it's a very fascinating kind of orange pill journey.
100%. And it's so hard to grasp for people because it's all we've known, right? We've all grown up in a world where there is no alternative. You use your fiat currency that your government tells you use, and like, there's not much to question. But the world didn't always used to be like this, right? It wasn't until like 1971 when we actually went off the gold standard. And so when you go back in time and you look at the history of it, that's when things are like, whoa, change is upon the horizon, and it's possible for something new.
Yeah, it really does require a history lesson because although Bitcoin's only been around since 2009, money has been around forever. But for everybody alive today, they've only known the dollar, right? They haven't known any other system. And so you really do have to break out of that. One thing you said that resonates with me a lot is Bitcoin providing an education. Can you speak more to that and, kind of the different domains that this requires to fully understand, right? Because there's no one-to-one or apples-to-apples comparison. You have to know history. You got to know computer science. You got to know economics, finance. Speak to more about, how Bitcoin kind of educated you. Maybe would it be fair to say even more so than going to college?
I would say so. I mean, one of the best quotes out there is that Bitcoin is everything you don't understand about computers combined with everything you don't understand about money, right? It forces you to question and humble yourself and accept that, you know what, maybe my worldview is not right. It's an ego test as well. And it has made me excited about this everlasting search for truth, I guess, in all domains of life. And Bitcoin has been at the core of that because it makes me think, what are the problems this is actually solving? When you go on Google and you search up like, what is Bitcoin? The first stuff that pops up, Investopedia, just starts talking about like hash block this and like mining and all the stuff that's really important. But without getting a fundamental understanding of the problems that need to be solved, it's really hard to grasp. I think that was the click for me when I had to step out of all of the technical details and like start looking in the philosophy of like an asset without an issuer and like, what does all this stuff really mean? And that's been like just a journey of learning about everything, actually.
Yeah, that's very fascinating. I didn't realize that's what popped up when you search what is Bitcoin, but it makes sense. If you don't know anything about it and you get hit with a bunch of technical jargon, you're probably going to click away. And I think this is one thing the Bitcoin community in general has gotten better at over the last 5 years since I've been in Bitcoin is having more normal people communicate Bitcoin. I think it goes a long way because, we love the OGs and Bitcoin wouldn't be where it is without them. But a lot of them are, very tech laser focused and not as much people focused. And I think we're getting more people in Bitcoin, which is going to be helpful for adoption.
Definitely. And a lot of people will look at the OGs and say, oh, you got in early. That's why you're promoting it. And you've already made your money. But if I get in now, it's too expensive, right? It's $100,000. That's too expensive for me because they just look at the price ticket rather than like the market cap and what's the actual total addressable market of what that can capture. I think that's something I learned at Bain, actually, when I was there. We would help in the private equity group. We would value companies by looking at three things, right? Like one is, all right, what is the market that this company is in and how big is that market? Two is, how fast is that market growing? Is it growing or shrinking? And then third, how is this company projected to perform within that growing or shrinking market, right? If you look at Bitcoin the same way, what's the total addressable market for store of value assets? Different people have different numbers, but a general consensus is around like $450 trillion of wealth that's just used for idle storing value, right? And that's only growing because they keep on printing money and that's going to grow. And now, how is Bitcoin going to perform against all of its competitors, which are other store of value assets, real estate, fixed income, equities, gold, fine arts like Mona Lisa's? I think it's going to grow a lot faster than a lot of those just because of the properties it has.
Oh, you accidentally muted yourself.
Sorry about that.
No, you're good. We'll chop this out. The last thing you said was because of the properties it has.
Yes, because of the properties it has. And when you look at that, I think Bitcoin's a faster horse in this race and is going to continue to grow. So when you just look at the price on its own, oh, it's $100,000. Like that doesn't really tell you much about how the asset kind of stacks up against others, So looking at market cap is, I think, what a lot of people end up missing when they're like new to Bitcoin.
I definitely agree. And you especially see that from I think this total adjustable market framework is very helpful. And we actually had Jesse Myers on last week. He estimates it more to be 1 quadrillion and growing. So it's massive.
So he's also a Bain & Company alumni. And so him and I were kind of trained in the same way from that sense. I think his model has 1 quadrillion as the total addressable market of all global capital. And then Saylor kind of said, all right, 450 trillion of that is actually utility assets, the house you live in, things that you need. And then 450 trillion of that is just excess money that billionaires spend on their third property because in Miami because they don't know what else to do with their money.
Right. That makes sense because not all of the 1 quadrillion is theoretically up for grabs. Now, I will push back a little on the Bitcoin demonetizing real estate. Maybe I'm steel manning too much here because I do think there's an element of that at play. But I think the rich man is always going to want to own his Miami Beach condo. I think he's always going to want to own a house in Jackson Hole or whatever. So I'm not as like bearish on real estate relative to Bitcoin as maybe some other people will be, right? Because if you think about one of the primary things that makes Bitcoin valuable is that it's finite. Well, Miami Beach real estate is also finite. And so I think Bitcoin more maybe demonetizes real estate in the sense that you're not going to have, mom and pop type landlords, just for example, I live in a college town and a lot of the college kids just live in these houses that are like investment properties. I think those more smaller type of real estate plays where, the mom and pop's just looking for a place to park some capital to get a return. I think that goes away. But I think the pristine real estate in very high demand locations is always going to perform really well relative to the fiat currency.
I agree. When you look at Manhattan or Miami Beach, like those will do well. I guess my take on it is like that has been the best proxy for storing your value in a fixed supply, not fixed, but scarce supply resource, right? Land is pretty finite. They can obviously build taller buildings or expand houses to build them wider in less populated areas. So there is no true fixed supply. But yeah, I think the point of money is it's a market good that you can later exchange for things that make your life better, right? So if you feel like you want a house in Miami because that's where you can raise your family in the most beautiful weather, then great. Then use your money for that, right? I think what it's going to solve for is the percentage of wealth that's like I don't know what to do with this. I already own 3 properties. I'm not even using the third one, and it's just a headache to manage. And there's all these property taxes, and I just want to keep it simple. I need something to store that wealth for now until I know what else I want to do with that wealth. Bitcoin is a great long-term solution for that. That's at least my perspective.
Yeah, no, I definitely agree. I think it gets rid of the guy with 8 Airbnb properties because he's like, man, I can not be taking out trash and scrubbing toilets, and I can just hold Bitcoin and outperform. But Michael Saylor says there's no second best, but the only other asset he owns besides Bitcoin and strategy is his Miami Beach mansion. So I think that
Right.
that tells you a lot.
It definitely does. But I think one of the things he says that's really nice is that like Bitcoin is for everyone, right? It doesn't matter if you have $20 of investable income or if you have 20 million. Like you can put as much in as you want. With a property, it's not as liquid because you need a specific amount of capital for the specific property that you like. You know, if you like Bitcoin, you can get in with $10, you can get in with 100. I think that's the cool part that you can't get with a lot of properties. And quite frankly, a lot of our generation is, you've seen the charts, is starting to be priced out. Like I think the median age of when people get their first home has gone up by like 5 years every decade or something like that. And so that's definitely sad to see. And people want other ways to store their value if they feel like they're getting priced out, at least at an early age, of nice property.
Right. That's well said. And I think it gets at the heart of some of the things I love about Bitcoin because it does, for a real estate that you have the concept of a starter home, right? Which is like, you need to save up 20% of, the lowest tier kind of property you can get. It's like just to get your foot in the door is a lot for especially, Gen Z coming out of college with no wealth to their name, a difficult job market. Like even just getting 20% down for a starter home can seem like a lot versus, like you said, you can buy $5 of Bitcoin. You can buy $10 of Bitcoin. When I started buying, I was, buying like $5-10 a day because I was a college kid with no capital, just working part-time. But it doesn't matter. You can be a billionaire like Michael Saylor and Bitcoin's super liquid and you can, it can support your capital requirements, or you can be, selling bananas in a third world country and save, with $1 a day you make in Bitcoin. It works for everyone.
Exactly. I think you hit upon a good point that like our generation is being priced out of that like first home. And I think that's why you also see a lot more of this like gambling culture. I think Polymarket, Kalshi have blown up, sports betting over the last few years, crypto bros that are just looking at their 100x moonshot meme coins. And I think boomers will look at them and be like, oh, these people are like degenerates. They need to get their lives together. But I think these people, a lot of my friends as well, like feel a little bit hopeless and they need that like 100x to feel like they can make it out of this race, But I think like if they spend time to understand Bitcoin as an asset and what it can do for them, if they have a low time preference, you're not going to get your 100x tomorrow. But if you save your wealth in it and over time have that patience and humility to go through the bear markets and the bull markets, I think good things can happen out of that.
Yeah, I agree. I think the hyper obsessive gambling culture is more of a symptom rather than, it's cope. It's people that our age and they don't feel like they have any financial future. And so like, screw it, load up $50 into DraftKings every week and let it rip rather than taking the long time horizon and say, if I just put this away, heck, not even in Bitcoin, but like the S&P 500 and get 10% a year for the next 30 years, like you do pretty well. But if you put it in Bitcoin, you'll get 50 to 100% a year for the next 10 years and you'll be doing just fine. So I definitely agree with that.
Yeah, I think the other interesting thing that Bitcoin has helped me with is just have a low time preference on life in general. I've accepted the fact that, okay, this is not some 100x moonshot that I'm just buying in to get rich quick in the next 2 years. Like it's a long game. And because of that, I've now thought a lot more about family, wife, kids, where do I want to live in the future, taking care of my health for the long run. And I think it's been a mindset shift that I really escalated once I started to understand Bitcoin and the whole philosophy around it.
Yeah, same here. I mean, I don't know about you, but I definitely had high time preference when I got into Bitcoin. It wasn't like, oh, I had a low time preference and this makes sense. It's like Bitcoin actually influenced my actions and my preparation for the future. And definitely, like you, the Bitcoin standard was instrumental in making all that make sense.
Definitely agree there.
So we've kind of dissected the real estate, Bitcoin versus real estate. And I think a good place to take this conversation next is Bitcoin taking from equities and bonds. And if I had to guess, you might say this is where Bitcoin treasury companies step in, because that's certainly how I feel. So can you give me, obviously you've built this very cool website, and I'll pull it up right now and do a screen share so the audience can see exactly what I'm talking about. But for those listening, this is very cool. So it's bitcoinquant.co, and it has data on, correct me if I'm wrong, but all of the publicly traded companies with Bitcoin?
Correct.
Yeah, so this is really fascinating. It's got information on their Bitcoin holdings, NAV, stock price, year-to-date returns, et cetera, et cetera. So talk a little bit about your broad thesis on Bitcoin treasury companies and the role you see this playing in the market over the next, year, 5 years, 10 years, however you want to approach this question.
Yeah, that's a great question. So I guess broad thesis is there is a lot of capital that wants to get into Bitcoin or have Bitcoin exposure that is not able to through traditional methods. They could not buy spot Bitcoin. Then the ETFs came out. So that gave a good amount of them ability to get in directly to Bitcoin, correct? Then there is this swarm of companies, these equities that are public where you can invest your capital, and they are going to buy Bitcoin. And so a lot of people ask, well, why would I buy a Bitcoin treasury company like MicroStrategy versus just buying Bitcoin itself? It's because if you buy one Bitcoin today, that is a static certain amount of Bitcoin that you have exposure to, right? If you buy an equity like Strategy, you will have a certain amount of Bitcoin per underlying share today, but without you having to buy more shares, over time that Bitcoin per share will go up. So from your same underlying amount that you bought, you're getting more Bitcoin exposure over time when you buy an equity versus buying a static asset like Bitcoin or IBIT, for example. Now, that's a general, there's a lot of math that needs to be done behind that to see, okay, which of these companies do you think is actually going to grow their Bitcoin per share faster than the others? And is it actually justified at a price that makes it make sense rather than buying Bitcoin it's directly, right? And so what I realized, and the reason I wanted to make this site with my business partner, Brandon, is that like there's bitcointreasuries.net, which and a few other websites that have great information on like static Bitcoin holdings. But there's not a true database where you can analyze all of these companies and the metrics needed. A lot of these companies have their individual dashboards like Strategy, Semler, SmarterWeb, but there's a lot of companies that don't. And so it's really hard to look at all of these side by side. And so I figured, you know what? This is a space that can use extra added transparency, and I want to contribute to that however I can.
I think you've done a fantastic job. I mean, this is very, very comprehensive. I think one thing that, I hadn't thought of before until I saw this site was the year-to-date daily Bitcoin rate. So the amount of Bitcoin each of these companies has bought per day in 2025. And I mean, it really, really puts into perspective where Strategy is above the rest, right? Because you look, they're buying 800 Bitcoin a day. Only 450 Bitcoin get mined every single day, right?
You can actually click on that column, and it'll filter it by top to bottom. Now, there's a few of them missing actually because the companies that started with zero are not being reflected here. But you can just get a picture of how fast Strategy is accumulating versus some of the others, and it's quite remarkable.
Yeah, that's crazy. They're at 759 Bitcoin per day. Second place is Metaplanet at 72, which that's very impressive considering, a year and a half ago, they were a penny stock with it was trading for like a couple cents in terms of USD, right? There's some very interesting stuff here. So how do you view Strategy in comparison to all these other companies? Because I think one thing you mentioned that I think is key is, the growth in Bitcoin per share is kind of a way to gauge the value of these companies, right? If you take a company that has 100 Bitcoin and they 10x their holdings to 1,000 Bitcoin, that depending on your time horizon might outperform Strategy, who already has 600,000 Bitcoin. They can't 10x their holdings, obviously. So, but if I were to steelman that, I would say, well, Strategy being the biggest Bitcoin treasury, the most liquid options market, they're going to be able to issue more preferreds and that kind of stuff and raise more capital to buy more Bitcoin. So there's kind of a balance here. How do you think about valuing these individually?
Great question. I think in terms of that metric of Bitcoin per share growing at a fast rate, there's different levers that these companies can deploy in order to make that happen, right? There's a lot of controversy over the dilution or accretive dilution, where these companies will sell their own shares to buy Bitcoin. And so if they can take on more leverage and get access to new pools of capital that maybe some other smaller companies couldn't, that's an advantage. But I think at the end of the day, this is just one tool for people to look at as they are valuing their companies to see what actually makes like the most sense.
Yeah, that makes sense. This is very helpful. So I want to learn more about how you made this. Do you have any coding experience? Like, where are you drawing the data from? Like, what's the kind of backstory behind this?
So I met up with a friend at Starbucks just to get some work done. And he showed me Cursor. He was working on Cursor to build something. And I'm like, dude, what's that? He's like, check this out. And he shows me, he just like types in English and it generates some code. And that's when I got introduced to the world of quote unquote vibe coding. And so the first thing I built just for fun was actually, you can pull this up too. It's bitcoinscoreboard.com. And I built this as a fun way for people to compare Bitcoin's growth versus like Mag 7 and gold. So there's that famous screenshot that gets posted all over that's like assets by market cap.
Yeah, I'm guilty of that.
But they don't actually show, they're not Bitcoin oriented, right? So now this shows what is the Bitcoin price needed in order to surpass these other assets. So at $186,000 a coin, Bitcoin's market cap will surpass Microsoft. So it kind of just shows like a fun little tool. And if you go down a bit, there's also a fun regret calculator. Put in like 1,000 and then try like the first preset event. So if you had bought Bitcoin when click on the drop down.
Yeah.
Do like when Jamie Dimon said Bitcoin was a fraud or something like that. You would have $30,000 today. So I was kind of getting, this was more of a playground for me to understand AI. And before this, I had never created a GitHub account. Before a few months ago, I had never opened up a Vercel or done anything on any server. And I always lacked the confidence to get into coding because I was always intimidated. But this has just shown what AI has enabled me to do and how much power it's going to bring to the world and how much it's going to change the world. It's going to enable people who have good ideas in order to let them to actually execute on them, when in the past they must have needed to hire very expensive developers. And so it's quite eye-opening.
Yeah, this is very impressive stuff, especially considering no coding background. I like that quote you said there at the end. This is going to allow people with good ideas to actually execute instead of having to hire developers. It makes me think of the Apple story, right? It's like you had Steve Wozniak, who was like this wizard, but then he needed Steve Jobs to like amplify everything, and nobody ever really remembers Wozniak. I think this could do a good job at kind of wiping it, not to like rag on Steve Jobs or pick on him specifically, but like kind of getting rid of a lot of the fluff in the economy, so to speak, and really just allowing people to create and to build and leverage, allow everyone to reach their maximum potential.
Definitely. And I know there's a lot of like talk about AI being used in a lot of big companies like Salesforce, and there's controversy over that of whether AI is actually taking those software engineering roles. And I can't speak to that as much. But what I can say is that maybe not for complicated algorithms like what they're building, but for anything like front end related where you just want to build a simple tool to see some sort of outcome, like anyone can do this now. And that's different and very eye-opening.
Yeah, it absolutely is. One suggestion I would add, this would be fun, would be showing the market cap in Bitcoin terms, right? So Amazon would be like 22 million Bitcoin. Gold would be 200 million Bitcoin. That just gives more perspective relative to the finite amount of BTC.
Definitely. And I was even thinking of like adding like the Forbes top 20 net worth list and see like what is their net worth in Bitcoin if they were to just full port. I'm not working on the site that much actively, but there's so much that could be done. One of my good friends runs the site priceinbitcoin21.com, where you can actually see all of these like price in Bitcoin. So the world's changing. And I think using AI to make money and then storing that money in Bitcoin is the big meta right now. And I fully stand by it.
Yeah, I think it will be for at least the next decade. It would be curious to see the billionaire's net worth denominated in Bitcoin and then a chart of that going down over time, because unless they fully poured it into Bitcoin, their BTC net worth is melting.
Yeah, I mean, everything is. When you pull up any of the charts of like store value assets, right? Average price of a home, average car price, S&P, gold. Look at anything over the past, since the inception of this, it's just gone down. And it's just so interesting that it's memed its way into reality. You know, this magic internet coin can actually be what the world runs on. And it's just so cool to see that happen over the long run.
Yeah, it's fascinating. Dude, talking to you is like getting me hyped up and inspired. And this kind of confirms one of my running theses about our generation is this: there's going to be a huge gap that's already forming, and it's going to continue to grow. So we have guys like you who are, vibe coding, almost like solo entrepreneur, taking the world by storm, saving in Bitcoin. And then on the other extreme, you have these DraftKings crypto addicts. And, this gap is just going to widen drastically over the coming decades.
I think so too. It'll be interesting to see how it plays out. And I encourage all those people to just take the time to really understand. So most of my friends who know that I'm like into Bitcoin, they'll text me and their second question is, so should I buy ETH right now? What about XRP, right? Because they just see these as number go up technologies, but they don't actually know what's going on behind the scenes or what this is supposed to be solving. They don't know about Bretton Woods or about Rye Stones, or they just don't know the history of money to be able to really put the pieces together. And that's the thing that I encourage people to start with, of like understanding the history of why this actually matters, more so than just like the speed of the technology and how fast transactions can happen,
Right. I agree. And I was orange pilled by the What Is Money show. So it's very fitting. If that's not step one, I don't think you're ever really going to get it.
Yeah, I think Robert Breedlove says like that's going to be the defining question of our generation, of just like, what is money? You ask people on the street, it's like, oh, it's just currency. It's just what I buy my groceries with. And people are like, I'm never going to buy my groceries with Bitcoin, so therefore it cannot have any value. And that's the part where it's like, you know what? Like, let's question that a little bit. Let's spark the debate. And the timing of this podcast right now, unfortunately, there was a very tragic death yesterday, right, of Charlie Kirk. And I think one thing that he was very inspiring with is like, question everything, give everyone a microphone, hear all perspectives. Don't just assume that you know the answers to everything, and really get to the uncomfortable questions of like asking 7 whys behind everything. And it's that alone is very powerful and can really change a lot of perspectives, including your own.
Yeah, it absolutely can. You have to be able to be inquisitive and seek the truth. And rest in peace to Charlie Kirk. It's a very, very sad time right now.
Definitely. I think it's one of those things that like nobody gets into Bitcoin like just like, aha, it makes sense. Like we all have to go through that feeling of like, man, like what? Like, I don't really get it, and if you're accepting of the fact that you can go through that phase and come out the other side, then it's going to do a lot of favors for a lot of people.
Yeah. I think everyone thinks Bitcoin is a scam when they first hear it. It realistically, it took me, I would say like 12 months to go from first touch point to, I really feel like I have a solid understanding of this. In the first 6 months of that, I had basically none. It was just like, brush this off. This is magic internet money. I only acquired some because I wanted to gamble on the 2020 election. That's how like far away I feel. That seems like a totally different person now than it was, I was 4 or 5 years ago. It's insane.
Definitely. And my new thing now is like, whenever people ask me like, is now a good time to buy, or like, should I buy? I never say yes anymore. I say, until you can study it and tell me what's the difficulty adjustment algorithm, no, because what's going to happen is if you don't know what you're buying into, the second it goes down a little bit in a volatile asset, you're going to sell it. And that'll just be a net negative for you. And I do the same thing with a ton of other assets, right? If I buy certain equities and I'm like, it starts to go down, I'm like, like they say buy low, sell high, but it's a very hard thing to do unless you truly understand what you buy. And I think that's why like Warren Buffett was such a good investor for so long, because he truly took the time to understand what he holds, those balance sheets of those companies. And so he could go through those difficult phases of down periods. And I think it's the same thing with Bitcoin, that like you have to first study it before you like invest a lot, and that's something that I think people want to skip that part because it takes time. They have busy lives, understandably, but I think Saylor always says like, you work however many thousand hours in your life, like spend 100 hours to study how to keep it.
Yeah, that's a great quote. I don't think I've heard that one before. And I agree with your take, but I will add a caveat. So with Bitcoin, you need to spend a lot of time on the front end studying it and understanding it. But after that, like once you get it and you're orange pilled and you're stacking, you can kind of be hands off. And that's one of the beauties about it is if you want to be Warren Buffett or a hedge fund manager and you want to invest in equities, things are constantly changing. The markets are changing, technology is changing, leadership of these companies is changing. And so you have to continue to put in hours to perform well in that environment. Versus Bitcoin, you put in time on the front end and you stack sats, and then you go focused on your craft. You go focus on spending time with your family or building a business or doing the things in life you really want to do. And I think it does get to the root of what is money. It's a tool to save your wealth into the future where you can own something today and know it's going to retain value in the future. Versus even holding equities, it's like, okay, there's still a pretty high degree of uncertainty. You know, the top 5, 10 companies today, we're not the top 5 or 10 companies 20 years ago, 50 years ago, 100 years ago. And so I think Bitcoin really takes that idea of like being hands off, so to speak, with your wealth to a level that hasn't really been seen before.
100%. And like there's the big quote that goes around of like hedge against inflation, right? I think that's true in the sense that Bitcoin takes a lot of energy to create. It's rare, and you can't just create more of it very easily. And so that's why it's like gold in that sense that it protects the downside of money printing, but it also captures a lot of the upside because of how new it is, and it's like an emerging tech asset, and it's just very a lot of people just don't know what it is yet. And that's where the upside comes in, you know, like if everyone knew what it was today fully, then everyone would have already ported their wealth into it, and there wouldn't be as much upside. It would just kind of track money printing. But because you have this alpha that you can learn it before a lot of other people's learn about it, that is where a lot of the upside comes in as well.
Yeah, I agree. And I would also add to it, a lot of the upside is the technical restrictions on much of the capital in the world. So as you pointed out, the couple $100 trillion worth of assets that Bitcoin's coming for, a lot of those that capital is managed by people that they might understand Bitcoin, but their hands are tied with legalistic red tape that says, you know, you run this bond portfolio and you can't just girth into Bitcoin, even if it was a small percent of their portfolio, right? It's like they have these mandates, and I think that's where Bitcoin treasury companies come into play. One thing I want to make sure we get at is strategy in the S&P 500, because I think this could be a great way to sneak Bitcoin into the portfolios of everyone, right? Because every boomer and every Gen X and millennial, they hold some of the S&P 500. And so I think this could actually, obviously it's bullish for strategy, but this could be a way where we kind of subtly onboard the rest of the world into Bitcoin, so we're not the only ones winning when Bitcoin goes up. Do you kind of see it the same way?
I 100% see it the same way. It was unfortunate it didn't make it through this first cut, which is okay. I mean, these things take time naturally, and I think people realize that. And like the same thing I said with like, there's upside because other people don't see this yet. That's the same is true with strategy or these other stocks, right? Because the S&P does not have consensus of like, oh, this definitely makes sense. You can now stack it at lower prices than when it does get added, when all of a sudden everyone agrees unanimously that this makes sense. You know, if you can see that before the others, that's where upside actually comes from. And yes, I think everyone should have exposure in some fashion, and a lot of people have exposure to the S&P, and it would be great to kind of combine that so that they get a little bit of Bitcoin exposure at least. But I think it's going to take time for a lot of people to really understand that, especially in like the committees of the S&P and some of the other indexes. And so that'll come with time.
Yeah, I think that's one thing. Even a slow time preference Bitcoiners, we can kind of get over our skis on some of these things. I remember in 2021 when CPI was like 9%, but real inflation was much higher. It's like, oh, everybody's about to get Bitcoin. We're super cycle. It's here. We're going to the moon. Like fiat's dead. It didn't happen. 2023, Silicon Valley Bank collapsed. I'm like, this is it. This is when Bitcoin's really going to catch on. Didn't happen. 2024, Trump's being pro-Bitcoin. Larry Fink's pro-Bitcoin. Strategic Bitcoin Reserve. Kind of happened, but not really, right? It's all these things are going to take time, and I think, we're going to be able to look back, 20 years from now and be like, oh yeah, this was hyper Bitcoinization. We lived through it. but it's not, it's not a singular moment. It's not even a singular year. It's a slow unrolling of events and capital slowly funneling its way into Bitcoin.
Exactly. I think you had a very good tweet that blew up where you're like, there's two phases of Bitcoin post 2023 and pre, right? With the institutional era of like the ETFs. And that's very true, that it's now going to be a little bit of a slower grind up with less peak to trough differences. And I agree with that take. I think the institutional adoption of this asset class is a game changer. I mean, this is the first time that an asset was adopted by retail before it got adopted by the institutions, right? And that's a big deal because now they don't want their bags to drop 80%. And so there's going to be a little bit more of a controlled slow grind up. And obviously Trump's talked about this now, and Larry Fink, and it's, even though that they've said it, it's still going to take time because of the mandates like you had brought up with a lot of these like RIA advisors. When I was at Bain, I did a lot of work with wealth managers, and just like the process of getting different assets in front of those investment committees, like they only meet once a quarter at best. It could take 3 to 4 quarters for them to even approve these things. And so it's that saying, gradually, then suddenly. I think that's true with this. It's just you're gonna look back and be like, whoa, how did it jump that fast?
Yeah, that's interesting. The quarterly meet of these giant conglomerate companies that move really slow. It's one thing I love about working in Bitcoin at a Bitcoin mining startup is, there's not like a lot of that fluff. We make decisions, we move quickly, and I love it, and I think it's very valuable for a business. But obviously, when you reach a certain scale, you just can't quite be that efficient. And you mentioned my tweet that blew up. It's not live now while we're recording this, but by the time this video goes up, you'll be able to see I wrote a full in-depth report on why I believe the Bitcoin 4-year cycles are over. You look at a lot of, I do statistical regression on the realized cap and its relationship with the market cap. So basically measuring the impact that net capital inflows have on the market. And what we've seen over time is the impact has been far more predictable and less reflexive, which even if you look at the price chart, you can see this, of course, right? We don't have these massive booms, massive busts. And I think the ETFs, if anything, they were a symbolic moment where Bitcoin went from that retail era to the institutional era, but they also, of course, had a tangible effect in that it was the bridge by which a lot of these institutions could actually get on board. So I'll keep a link to that. I'll put a link to that in the description. Everybody go check it out. If you disagree, let me know why, but I'm willing to stick my neck out there, and I think the 4-year cycles as we know them are over, and Bitcoin's not going to have any more of these 75% drops.
That's so interesting. I'm excited to read it. Do you mind giving like a quick 2 to 3 bullet preview of what's the teaser of why you make that case?
I'll just pull it up right here. It's 5 sections. We start, this is just kind of like high level, like price action, realized volatility is down. The on-chain unrealized profits and realized profits have been far more muted. So you can see here, pre-ETF, you get these massive drops, but post-ETF, not nearly as much, right? Bitcoin goes into, you see on-chain market participants start to step into the market a lot quicker. They're buying dips, but they're also, inversely, they're quicker to sell, right? If you think about these institutional participants, they're used to 5 to 10% returns a year. So if they've been holding Bitcoin for 6 months, it goes up 50%. Of course, they're going to sell. And you can see that in the on-chain data if you just look at the long-term holder supply. So I'll zoom in on this. Post ETF, which is this gray shaded section right here, you can see where this orange area goes down. That's long-term holders selling. It's happened every time Bitcoin goes up 50%. Versus before, it took a massive move before long-term holders would even consider selling. And so that's one aspect of the report that I'm really fascinated by. I love this second section. So we look at realized cap versus Bitcoin's market cap. So this green line, this orange line rather, is the realized cap. So it's like the on-chain footprint of capital inflows. Every Bitcoin or every UTXO rather, their dollar value all summed together. So right now, the realized cap is about $1 trillion, which means $1 trillion has been entrusted to the Bitcoin network for that value to store. And then this green line here is just how the market reacts to that. So you can see pre-ETF, massive explosions up in the realized cap market. The price didn't know how to react to net capital inflows. It put on these huge multiples versus post ETF. We've just been consolidating in this area between 1.5x and 2.5x. And so you're seeing much lower highs, but inversely, you're not seeing these massive bear markets. And I think this will continue. And when we do a statistical regression on this, right? So what's if you take realized cap as your predictive variable, then what would you expect the market cap to be? And when you look at the residuals, so how far off is the actual value from the predictive value, the volatility in the residuals has gone down a lot. So this orange line is post ETF, really low residual volatility compared to pre-ETF, which means, realized cap is a lot more accurate of a predictor for market cap. And then when this box and whiskers chart tells the same story. So pre-ETF, you see a massive spread in the residuals versus a lot tighter post-ETF. Bar chart here tells the exact same story. So the net of it is capital inflows are far more a lot more in the driver's seat versus halvings or the market reacting with volatility to capital inflows. And here's a section on the halving. Again, this is kind of logical to me. Maybe you disagree, but like the halving being smaller relative to the existing stockpile of Bitcoin, of course, it's going to have less of an impact on price. The first halving went from 50 Bitcoin every 10 minutes to 25, bigger relative to, and this chart here kind of visualizes it relative to the 2024 halving, which was a marginal impact. So not as much of a supply side catalyst. And then the last part of the report is this comparison to other digital monopolies. So you have Apple and Amazon and Google, Meta, Facebook, and Microsoft, highly volatile during their first decade, right? The market doesn't know how to price in a new technology. What's going on here? Is this going to change the world? Is it not? Is it overvalued? We don't know. So you can see here, this chart shows the annual drawdowns in a lot of these tech monopolies. And it's kind of hard to see because we have got a lot of data on here, but Bitcoin is here in orange. The drawdowns are diminishing over time. And that's the story with all tech monopolies, right? So the x-axis is adjusted based to start at the IPO and genesis for all these drawdowns diminishing over time. And again, same story, but kind of emphasizing here, hey, Bitcoin's still volatile relative to, here I'm charting the volatility, the NASDAQ, the S&P, and Treasury bond ETF. Bitcoin still, of course, is going to be volatile relative to these things, but the volatility has gone down over time. And then actually the real last part is a price table. So basically, I don't like to make price predictions, at least not with a time frame attached to them, but the reader can make their own price prediction. So here in this chart here, we see realized cap in orange. And then in the green, I've just extrapolated the growth rate post ETF into the future. So since the ETF has gone out, realized cap's grown by about 400 billion a year. So 400 billion a year in net inflows. If we extrapolate this out, to 2030-ish, we're going to be at 2.5 to 3 trillion in net inflows, which is fairly conservative, right? There's 450 trillion in capital that Bitcoin could get to say it doesn't even get 1% of that. It's a pretty bare case. But you take that number and you apply some of the historic MVRV multiples to it, and you're looking at a pretty high market cap. So this table here simply takes the realized cap and the MVRV multiple and calculates what the market cap would be. So if we got 3 trillion in realized cap with the lower end of a multiple, say 1.8, that's a 5 trillion market cap. That's still 2x from where we're at today. We're looking at 250K per Bitcoin. And then this kind of the capstone chart of this adds a third dimension. So a z-axis, it's just this same chart here, but applying Bitcoin price to the z-axis. So you can see, at the extreme end, we're looking at over a million, almost 1.2 million per Bitcoin. So kind of a big mouthful here. And I also closed with a Jesse Myers table here of the total addressable market, because I think that's fitting. But I don't know, but stop me. Yeah, stop me there. Maybe I'm crazy.
This is incredible.
I think bear markets are over. Yeah, thank you.
I think that first section you brought up also really resonated with me, where like with the institutions, like they're used to a 30-year average S&P growth of 8 to 10% a year. And like, there's only like 5 or 6 hedge funds that even outperform that in the first place. And so when they see something go up like 20%, it's like, wow, with that amount of baseline capital going into it, a 20% return is just like huge.
Yeah.
Whereas for retail, sometimes they're like, no, I'm going to keep holding. And so that resonates a lot.
Yeah, and the on-chain data verifies that. This isn't even like, us theorizing or speculating about it. That's what we've seen post ETF. And I think to some degree they're mandated too, right? It's like you just made, however many tens of millions on this Bitcoin play. They still view it as kind of a speculative high-risk bet. If they're probably required to rebalance to some degree.
Right, 100%. Speaking of on-chain, maybe a little off topic, but I had seen the famous video of you asking Saylor the question of like proof of reserves, right? Mm-hmm. I've thought about that a lot. I think it should be an industry standard. Personally, I don't really understand the security risks yet that are mentioned, but I hope to see that change a little bit. It'll make my data gathering easier for the site too.
Yeah, definitely will. Yeah, that was a crazy occurrence. I've talked about it on some podcasts before, actually, but I don't think I've talked about it on my own. The story there was me and some of my Blockware colleagues got to the Bitcoin conference a day early. We were going to meet some people, do whatever. My flight happened to land really early, so we had some time to kill. I didn't even know this was an event going on. It was pretty exclusive, very private, but we were able to kind of finagle our way in there. And I walk in there. I'm looking around. I see like all these big hitters in the industry, and Michael Saylor's on stage. I'm like, whoa, like, okay. And then they start passing around. It's not even recorded, not live streamed anywhere. They start passing around the mic, and I'm like, I have to ask him something. Like I didn't know what I was going to ask him, but I'm like, I got to do it. This is my only chance. The guy with the microphone is like 15 feet away from me, and we just kind of made eye contact. And I was like, I guess, yeah, I'll do it. And everybody else kind of gave him softball questions and stuff he'd already talked about on podcasts. I'm like, I want to ask him something that nobody's asked him before that I'm genuinely, personally curious about as a strategy shareholder, still am. And yeah, his hostility towards it really, really surprised me. I was expecting kind of more of like a politician answer, like, oh yeah, we think that's a good idea, but we haven't been able to do it because blah, blah, blah. I didn't expect him to come out guns blazing against that, but kind of glad he did, because it's shown a light on and really elevated an important conversation. I think it should be the standard. One thing I was looking at on your site, I'm going to pull it back up here, was at the bottom, you have it summed up to pull it up right here, the total Bitcoin held by all these treasury companies. What happens when this is greater than 21 million, right? It's like in order for Bitcoin over the long term to avoid the problem that gold had with rehypothecation, is we have to make Bitcoin proof of reserves, on-chain proof of reserves, the standard, because otherwise Bitcoin could get theoretically rehypothecated just like gold. And I do think Saylor has all the coin. I understand for his preferred stock investors, they're cool with the Big Four audit, but he's always pitched MSTR as the play for the hyper triple Bitcoin maxi, he calls them. It's like, this is, leveraged Bitcoin to the neck, like, this is a Bitcoiner's asset. We're stripping the vol from the bondholders and giving it to you. It's like, well, if that's your demographic, like, we kind of like proof of reserves. We want to see that. And other companies have shown it's possible. Metaplanet does it. 21 does it. And this event, I asked them the question at, hosted by Bitwise. They do it for their ETF. So the security risk is definitely up for debate. I don't want to be the one to have that debate, but clearly there's, high net worth and institutions and people with skin in the game on the pro on-chain proof of reserve sides. It's not just, the laser-eyed toxic maxis that want it. And so I think I'm glad I asked it, and it's a good conversation to have.
100%. And that kind of gets back to like a few things. One of like what we were saying about Charlie Kirk, and just like, it's so good to ask these questions that are uncomfortable, that'll prompt disagreement, because that open debate is where change happens. When enough sides of the story are heard, then people can come up with better consensus. Like, we're so in the bubble of this like institutional side of Bitcoin that we feel like the whole world's in this, right? And the standards have already been set. But like, people are still trying to figure out, like, how do you even value these companies? People are making new metrics. Adam Back and Jesse Myers have their new ones that are coming out, right? Like, there's still a lot of room for shaping what is the true industry standard for how to go about these treasury companies, how to value them. And so I think by asking these uncomfortable questions and really putting that forward and encouraging the good, healthy debate is where we at least leave our marks on influencing the industry and the world more broadly. So I think that was a killer question you asked.
Thank you. Yeah, it was great. I was wondering, so in 2024 at the Bitcoin conference, I somehow lucked. I don't know if I got like a horseshoe up my butt, I think is the phrase, but I ended up in a dinner with John Jr. and Tucker Carlson, like totally random by chance. And I was like, there's no way I'm going to beat that. Like that's my peak. That was my best Bitcoin conference ever. And then day 0 of this one, I have my most viral moment ever with Michael Saylor, whom I respect. And I got a picture with him afterwards and all seemed well. So it was a crazy time. And yeah, I'm going to continue to ask questions. I'm sure you will as well. Rohan, I've really enjoyed talking to you. Is there anywhere you want to send the audience to keep up with what you're doing?
Just my Twitter, Rohan Hirani _. I'm new to the content game, new to the coding game, new to this whole game, but having a lot of fun with it and want to keep on introducing transparency to a space where it's much needed. And so you can find me on Twitter or at bitcoinquant.co.
Awesome. Everybody go check that out. Thanks for coming on the show, Rohan.
Appreciate it, man. It was good.